Hey guys, Richard Cooper, founder and CEO of Total Debt Freedom. I want to answer this question about debt consolidation loans because we get asked this a lot. People often, when they're trying to get out of credit card debt, they're looking for some way to take all of their credit card payments and tie them into just one. And in theory, it's great. And, in concept, it works well when you can get it. The problem that I find is that many people leave it far too long to try to consolidate their credit card debt. They leave it to the point where they're just not going to get approved. Now, there's high-risk lenders that do these types of loans at 30% plus. You can find a really good example of somebody that was a Total Debt Freedom client that tried it, and they got themselves into a situation before we helped them out where they were paying 39% interest on a debt consolidation loan. It was providing no form of relief, and in fact what it did was it pushed them right over the edge to the point where they were actually considering bankruptcy. So we helped this guy out. His name was Dale, and you can actually find the conversation I had with Dale online on our YouTube channel. If you just search for Total Debt Freedom Reviews, there's a playlist that has a whole bunch of testimonials plugged together, and look for Dale's story and you'll see exactly what happened to him. So again, you want to start and end at your bank. Borrowing money from a high-risk lender is just a path to deep trouble. You want to avoid it at all costs. So when you do consolidate, start and end with your bank. Typically, you'll find if they do approve you, you're going to get a lower interest rate than your credit cards are charging you, and hopefully on easier terms, so the payments will be more flexible based on your source of income. Now, if they can't do that for you, again, don't talk to these high-interest consolidators. They don't work. If you don't believe me, check out Dale's story and you'll see it for yourself. But the fact of the matter is, banks are always a good place to start when it comes to trying to consolidate your debt or getting a debt consolidation loan. A lot of people that are homeowners that have equity, and I'll use an easy number. Let's say the house is worth $100,000 and your mortgage is $40,000. If you owed $25,000 in credit card debt, you'd be a good candidate for a debt consolidation loan through your financial institution, your bank, a credit union, whoever it is that's going to be willing to help you. They'll probably do it in the form of a HELOC, which is called a home equity line of credit. And the interest rate will be peanuts compared to the credit cards. So start and end there. If that doesn't work out, we can certainly help. We do a debt negotiation, which is a settlement approach, where we work out a better deal with your credit card companies to reduce your debt by 50 to 75% usually. And people get out of debt over 3 years. It's an aggressive approach, so you want to try to avoid bankruptcy. Most people don't want to deal with a trustee and file for bankruptcy or trash their credit rating that way with a proposal or with a bankruptcy process. Again, if your bank's not going to help you out, talk to us first. We might be able to help you. There might be a fit there. If not, we're happy to refer you to a trustee for bankruptcy or a proposal if that's a better fit. And, if you come to us and it looks like you're better off talking to your bank first, if you skip that step, we can certainly point you in that direction and give you some tips. So, how to consolidate your debt with a debt consolidation loan. There you have it. Again, what did you learn today? Start and end with your bank. That's it. Thanks very much for checking this video out. Subscribe to our channel. We've got tons of great content coming. And if you want to get social, just check us out on Facebook at facebook.com/Total Debt Freedom. Have an awesome day.